I'm Charlotte McLeod with the Investing News Network, and here today with me is Nick Santiago, Chief Market Strategist at InTheMoneyStocks. Thank you so much for being here online with me today.
Oh, it's great to be back. Thank you for having me.
Of course. So let's jump right into our questions. Before this interview, I was reading through some of your recent tweets, and in one of them, you said 2021 is going to be one of the most dramatic years for the markets in a very long time. I'm sure there's a lot that's behind that. I wondered if you could start by just breaking it down for us a little bit.
Yeah, well, as you know, we've had a dramatic run since 2009, March 2009. The markets bottomed out. The S&P went as low as 666, and we've been rallying ever since. So I think that we're going up now in somewhat of a parabolic fashion. The 1 year of a decade, I'm a student of W.D. Gann. I've been studying Gann for well over 20 years now. The 1 year of a decade is always a very volatile year. And you could just go back and look at 2011. You could go back and look at 2001, and you could see how volatile of a year it was. And I think what we saw going into the end of 2020, we really saw a lot of froth in the market. We saw some rushed IPOs, Airbnb, DoorDash, you could name a dozen others or more. And then we saw really a lot of these SPACs catch real fire. I mean, these things were just going up parabolic. The moves were just tremendous. They were almost somewhat ridiculous. But that's how markets phase out. They phase out on euphoria. They peak out on euphoria. And to quote the great legendary John Templeton, markets peak on euphoria. And we're starting to see that. And the last thing I noticed in 2020, there was a dash for trash. And that's what I like to coin, as people were buying, micro caps, and they were going from $1 to $10. I saw some of these things go from 2 to 20. Those are just not sustainable moves. And last but not least, you have a very big crowd with the Robinhood traders getting on board. And I'm not picking on the Robinhood traders. I want everybody to get involved in the market. But when I see that kind of speculation come on now, I know we're late in the party, and markets are getting a little top heavy here. So I would be very, very cautious sometime the first quarter of this year.
Right. So clearly we have a lot going on, some carryover from last year, new things going into 2021. Given all the factors that you just gave us a rundown of, where are you seeing the most opportunity this coming year?
I think the opportunity this year, believe it or not, is going to be in volatility. I think you can own volatility, and there's several ways of playing it, whether you use VIX index options, or you just buy the VXX, or you buy call options on the VXX. The trick to this trade is going to be to give yourself a fair amount of time on the clock if you do it via options. And I think that's going to pay off in a large way. That's going to be the way I play it. I'll also be shorting the market at various points. And even when you short, you do have to cover, because remember, even if you go into a bear phase or a bear market, they have really, really big counter trend bounces. So it's going to be a trader's market going into 2021. But I believe the trade of the year is really volatility.
That's interesting. So just lean into those events that are happening. All right. So we have an audience, as you know, that's very interested in metals, especially gold. The last time we spoke, it was at a very exciting time for gold. It had just gone past 2000 for the first time. We're 5 or 6 months down the road from that. I wondered if you could give me an idea of the shorter term price action we might be seeing in gold.
Yeah, so if you recall back then, we went parabolic, and I think if I recall correctly, I said this move is unsustainable. We're going to need to have some sort of correction and pullback. I love what gold is doing. I don't want to see gold break out right now, because I think gold is going to make a big surge in the next few years. But right now, we're still doing a lot of backing and filling, because we just surpassed that all-time high in August, where we took out the 2011 top. Anytime you go up in a parabolic way, you're going to come down and you're going to stage some type of correction. I love what gold is doing. It is not making new highs. It's coming down. It's having short rallies, and then it's coming back in. And I think we still got a lot more backing and filling to go. I do think the 1700 level gets me interested in getting long gold. I'm not sure if that would be for a trade or even a longer term position play, but that's probably the spot that I would look for ultimately if I do get into that metal. And by the way, I think silver right now is even looking more attractive than gold on a daily chart basis. So, that's another way to play it. Silver, in my opinion, is really affordable still. And I think that's going to be the way to play the precious metals going forward.
All right. So, but just going back to gold, $1,700 gold, is that something that we could see this year?
Oh, I think we will see it. There's really very little doubt in my mind that we won't see it. I believe we will see it. Just remember, very often gold will trade with the stock market. If we get a stock market correction, gold will fall with it. And I think it's very attainable to see 1,700.
All right. Are there factors you would be watching for that would be an indication of that's the direction that it will be going in the near term?
There are some factors. Timing aspects are very, very important. But what I like to always do, because most people, it's a little bit difficult to explain that to them, but just watch the chart and you'll see that the retraces, even the last little rally we've had in gold, we went up to 1,900 and we've kind of stalled there. Today, gold is pulling back. So you get these little ABC moves up, but we're not really breaking out. And I think you still got more backing and filling. But the positive for gold is when you look at a monthly chart, you'll see that we're putting in a very, very nice inside bar formation from the last breakout high. And that's a very, very powerful position, not at the moment, but it will be down the road. And that's the one thing I always try to tell traders. You have to look at these bigger time frames because that's going to give you the bigger picture of what equities and what precious metals and any kind of tradable instrument will do. And gold, in my opinion, is setting up for that mega surge where we're going to see 3, 4, potentially 5,000, but it will still be 3-4 years away.
All right. And the last time we spoke, you really emphasized the importance of physical precious metals, having physical gold, I think physical silver. What about the equities? Do you have an interest in gold or silver equities at the moment, or would you still recommend looking more at the physical metal?
Well, I think everybody should have some physical metal as the ultimate insurance policy. After all, we have central banks printing unprecedented amount of capital. We've never seen anything like this. U.S. debt is astronomical now, 26 trillion and growing every single day. And you have other places around the world. That's hence why Bitcoin has been doing so well. But in my opinion, I want something tangible. I own bullion. I own gold and silver bullion. I've owned it for many, many years. I have never sold a single ounce of that. But as far as the equities go, GLD, IAU, GDX, GDXJ, they're all tradable. And I think I encourage everybody to trade them. Some of my best trades in 2020 were GDX. And, it was just a tremendous moneymaker. But going forward, I think you got to be a little bit careful, wait for the right patterns, wait for the right levels. And there's great money to be made in the equities, the gold and gold miners in particular. I think that's the best way to play it.
Right. And you mentioned the central bank money printing. What do you think is in store for the US dollar in 2021?
Well, a lot of people right now are very, very bearish the dollar. I am not one of them. I think the dollar is going to appreciate now. I think the dollar is in a bottoming process as we speak. So if you look at the dollar, it's really gotten hit very, very hard since this last QE infinity has begun. And rightfully so. The money printing, dollar gets weaker. But I think in 2021, we're going to see a strengthening of the dollar again.
And I think wrapped up in all of this too is the Bitcoin price action that we've seen. Definitely, we've been starting to get some questions from our audience about that. What do you make of that rise, which, like gold in the summer, is quite parabolic?
Yeah, the Bitcoin move has been incredible. But as you just mentioned, you said the right word. It's parabolic now. And anything that goes parabolic is going to come back down. And recently, I just saw an NFL football player say that he wants to get paid in Bitcoin, and he did get paid in Bitcoin. If you remember in 2006, 2007, I think Gisele Bündchen had said that, the supermodel, and then a bunch of celebrities said they wanted to get paid in the euro. And we saw how that worked out for them, not so well. So I'm going to go with that same premise. When everybody's on the same side of the boat, you should get over to the other side of the boat. Bitcoin has had a tremendous run, but I think it's time to cash it in.
All right, now we've talked about gold and silver. Are there any other commodities you have an interest in as we head into the new year?
Well, I've been very interested in copper. I'm out of copper plays now, but I've made tremendous money this year in Freeport-McMoRan, Southern Copper, and back earlier in the year, I told my members that copper is ready to break out, and that had a tremendous move. Now it's parabolic, so now we wait on it to pull back and stage a correction, and then we'll look to get back into copper again. But copper has been really my play of the year, so to speak. But now, it's just too high on the charts. I don't chase anything.
All right, well, I think that is a good overview of what's going on. I do want to wrap up by asking you a question I've been asking a lot of people, which is your best advice for investors as we head into what looks like it's going to be a very interesting year.
Well, I would say you really want to understand and learn the charts. The charts, first and foremost, are what I use and what I do. And if you don't understand the charts and you're just listening to news or you're listening to anything out there, it doesn't work. You need to really look at money flow. You need to understand the patterns. You need to understand that what charts are, they're the footprints of human nature. And they tell us where the market's going. It's not about my opinion or anything like that. What I do is I look at charts, I look at time frame analysis, and I study what the market has done in the past is what it will ultimately do in the future. So if I could just give one word of advice to anybody new that is entering this business, learn the charts.
And what would be a good place to start if you're brand new, you want to get into charts?
You come right over to InTheMoneyStocks, take all of our courses. They're probably the most affordable courses out on the market. I'm doing a 12-month course. I'm going to do one course a month, and we're calling it Trading Mastery. And you could come in and learn this throughout the year. Take your time. Remember, this business is a marathon. It is not a sprint. If you want to do this for the long haul, you're going to really need to learn the charts. And no better place. Come on over to InTheMoneyStocks.com. My service is called Bullseye Trading there, and you can see everything that I do and coattail me.
Perfect. Well, thank you so much. It was great to talk to you again. I always appreciate the insight.
Thank you very much for having me.
Once again, I'm Charlotte McLeod with the Investing News Network, and this is Nick Santiago with In the Money Stocks.